Hey everyone, Codex here. Today what we're gonna do is take a look at Bitcoin, just doing some technical analysis and taking a look at where our bottom could actually be. We're going to be discussing three different indicators to see whether 34,000 US dollars is really our bottom or if we could go much lower in 2022 and potentially even in 2023. So if that's something you are interested in and you find these videos helpful, make sure to subscribe to the channel, like the video and click on that bell icon so you get notified when I upload a new video. So kicking this off, this is the Bitcoin logarithmic curves indicator. Now, some of you know the free model, the free indicator on TradingView, but they are completely different from each other. The other one doesn't account for all the data points. It's made through the Fibonacci levels. However, this one accounts for every single data point since 2010. And I even included the crash that we had back in March that everybody seems to always forget and exclude. So we're going to be focusing on the green band of this indicator, which usually tends to be where our price bottoms out. So as you can see, after reaching the red band, which usually indicates our market cycle top, we tend to have a massive pullback. And the issue with these pullback, or let's call them crashes, is that they lead to bear markets and further moves to the downside that nobody really knows when they will stop. I mean, you will see people telling you that this is the dip right here. And if the price drops to lower levels, they will also say that this is the bottom now. But the price just keeps on falling down every single time. However, as I said, our bottom has, historically speaking, always been in this band. We have had it right here from the end of 2011 all the way till Q1 of 2013. So this lasted for a very long term, around 1 year and 4 months after our top in 2013, which has also occurred in the upper red band. We have seen a massive crash, and as in the previous market cycle, the price ended up heading to our green band after falling 86%. That's massive. In the famous 2017 rally, when we had our correction, the price also went to our band, but it was brief. I mean, we barely went in it, as you can see. Look, we went about 8% below it, which isn't that significant in comparison to the previous years. However, you can see right here in March that we reached the bottom of our band when everything went down. If you remember March of 2020, you surely remember that the unemployment rates skyrocketed. You also remember that the stock market got hammered, and so did Bitcoin and the whole cryptocurrency asset in general. And as I said, when falling down here, we found our bottom at the lower part of the green band. So you can clearly see that it depends on the market cycle. It really depends. Sometimes we spend a brief time and sometimes we spend months in there. In some cases, we barely had contact with our green band, and with other cases, like in March, for example, for instance, we went all the way down in it. Now, as of late, our price has been falling down. But look, we are still nowhere near the band where we usually bottom out. This band has, historically speaking, been the area where Bitcoin finds its bottom. However, now we are still a bit off. The upper part of the green zone is at about 22,300 US dollars, and for us to reach it, we need another 36% move to the downside, and that's massive. I mean, I don't expect a 36% move to the downside to happen overnight or even in a week. It will most likely take a long time, and bear in mind, this is the upper part of the band that we are talking about. We haven't even mentioned the bottom part of it that we reached back in March of 2020, in 2011, and also in 2012. Now, of course, you have to keep in mind that the values increase every single day. So I decided to extend the lines manually just to have a projection on where we could actually bottom out, where the price of Bitcoin could go if we end up heading south, if we end up going down. And look, by the end of this year, the upper part of the band will be higher than our current price, coming in at roughly 36k. The bottom part, however, will be at about 21k by the end of this year. So if this is your usual bear market that will last a year or a year and a half, then you should expect us to come in this area and to spend some time in it. Now, it can be brief, like in 2018. However, it can also last several months, where we see something like this, for example. The price will move in such a way before trending up, and historically speaking, it takes a while for the price to reach its bottom after hitting an all-time high. Let me show you what I mean. In 2017, 2018, it took us about 53 weeks to go from slightly less than 20K all the way down to 3,200 US dollars. In 2014, let's go back, it took us 58 weeks. In other words, it means 406 days, so more than a year, and that's a very long time, especially if you came in this space as of late. If you came in this space as of late, I hope you can endure a year and a half bear market, because the road is surely going to be bumpy. Now in 2011, it was brief, actually lasting about 133 days before trending up. But look, despite that, we still spent a year and 4 months in this spend. If it takes a much shorter time, for example half a year, let's say 6 months, which is a very short period of time in the space actually, then our bottom would be between 14 and 26K. Now, if you ask me, in all honesty, I don't think we will reach 14,000 US dollars or go anywhere near it. But I do see 20K, 20,000 US dollars as a possibility if this is the end. I mean, 20K would be roughly 70% down from our all-time high at 69,000 US dollars, and it will fit perfectly in our band. So I'm opting for that as a better choice if, of course, we trend down. Before the end of this video, I just wanted to point out that we are currently very close to the fair value. The current price is slightly above 35,000 US dollars, with the fair value being just shy of 34K. We have talked about the fair value 2 or 3 times now. We first started mentioning it in December when we had the downward pressure, the beginning of a downward pressure. And if you have been here since then, you surely recall that I say that the best time to accumulate is when we are below our fair value. Now, we are just shy of it. About 3 to 4% move to the downside would take us below it, and that would be, in my opinion, the best time to accumulate. And look, of course, the price might drop below it. I mean, we have seen 40% drops after reaching the fair value, like in 2018, but this is still a much better way to accumulate than just going blindly and following the mass. I'm gonna give you my opinion, my honest take, that you don't have to follow, of course, or take. You are free. It's my channel after all, and this is my opinion. If you don't agree with it, then it's fine. But I think if you aim on making large gains in the next rally, this is what you should be aiming on. You should start slowly accumulating, and the lower the price falls, the more you accumulate. Same thing with our investor tool right here. Let's see it. Just take a look at it. The bottom has always been about 40 to 45% below it. We have experienced that back in 2011, where the price went down around 45% below the 2 years moving average, which is color coded by green, by the way. Same thing happened in 2015 actually. When we crashed, as you can see, we went below the investor tool. 2018 wasn't much different from the previous time, and so was 2020. Now, this may seem like a small gap in 2020, but it isn't. It's simply because this chart records closes. So the BTC price right here is at 5K. However, we went much lower than that. And if you can recall, and if I'm not mistaken, of course, I think our bottom was at about 3,700 or 3,800 US dollars back in here. So we went about 45% below the 2 years moving average. So currently we are getting close to our MA. It's at roughly 30,350 US dollars. So by the time we reach it, it may be much higher since it has increased by 2,600 in the last month. The 2-year MA is going up fast. And yeah, as I said, if we are going to go below it, you should expect another 40% move, let's say, if history is any indicator. So this was about it, guys. I hope this gave you some insight on what may happen next. Given the bearish momentum that we are currently experiencing, I think you should keep an eye on these 3 indicators if you want to accumulate heading into February and, of course, heading into the rest of this year. I do believe that there is a chance our bottom would be below 25K. I do believe so. Can I be wrong? Yes, of course, I can be wrong. I have been wrong many times in my life. But am I using data and numbers to give my opinion? Yes. I'm not throwing random numbers on the table. I'm just looking at what has happened previously and making my mind based on that. As I said, I hope this video was helpful. Thanks for sticking by till the end. Don't forget to smash that like button, subscribe to the channel, join our Telegram where you can get the risk metrics for free, and peace.